Hi everyone. So welcome to the stream today. Very much excited for having you. Today we're looking at one of the most important aspects of the syllabus. This is a 10% of your syllabus grading. Last semester, the examiner did not set any questions around this area, but it's something that is critical, fundamental in the syllabus, and possibly the examiner may be visiting it this semester for you to be asked on what you need to do about it. So we're looking at the public financial and accountability framework, public expenditure and financial accountability framework. That is the PEFA framework. This is 10% of your syllabus grading. Welcome to the stream. If you join the stream, you give us a thumbs up on the video, then comment below in the chat box with any questions that you have. Grace, the Fiamepo, I see you. Good evening. I hope you are doing well. Big Franco said, put the Zoom link. I want to join. This broadcast is not an open broadcast that you can join. We are just using the Zoom as a platform to stream our lecture. So you can still join the lecture here on YouTube and then comment in the chat box with any questions that you have. Gordon Jibuzi. Good evening. I hope you're doing well. If I butcher your name, forgive me, okay? It's not intentional. All right, so give us a thumbs up on the video and also share with others so we can get as much people joining the stream. And then if you have any questions, put it in the chat box for me now so I can answer that possibly before we go into today's discussion. So whatever questions you have, put it in the chat box for me so I can answer those questions for you. So let's see what we got. All right. Now, I have mentioned that if you're preparing for the ICAG exams, make sure you get a question kit or the question bank from the ICAG on the subjects that you are writing, because it's tailor-made and it will help you to focus on specific areas of the syllabus and have an understanding of how the question structure is going to be, so you can position yourself and prepare well for the exams. So yes, I know somebody will say, Nhyira, we have only 20 something days to go. You want me to go and buy a book? Why should I go and buy it? It's just 45 cedis or whatever amount it is. It's not any expensive amount. You could easily buy that and use it for your revision very well as you prepare for the exams, because that is going to assist you a lot. Now the Institute is trying as much as possible to produce quality content for students in their books, as well as their question banks or question kits. And I believe that you need to get that. It's not too late. You still have some time to go to be able to prepare for the exams. So that is just by the way. Let's see if we got some comments here. Okay. So we want to look at the PEFA, and this is, like I said, 10% of your syllabus grading. That is a public expenditure and financial accountability framework, the public expenditure and financial accountability framework. Right, so let me share my board and then let's get going. So public expenditure and financial accountability framework. So the PEFA framework. This is, like I mentioned, one of the critical aspects when it comes to public sector accounting and finance, because at the end of the day, organizations, entities will want to assess their performance and find out how they are doing in that case. But the first thing we want to ask ourselves is, all right, what is public financial management? Okay, step one. And then what is the public expenditure and financial accountability framework? Now, in a simple language, we can design or define public financial management as a system of financial resources, or as a system whereby financial resources are planned, directed, and monitored for the efficient and effective implementation of public service objective. So how does government raise money? How does government spend money? How does government achieve its objective? The system, the mechanisms of how government is able to achieve its objective, undertake its public services, is what refers to as the public financial management. So there are a lot of aspects of this that we need to understand when it comes to discussing the issue about public financial management. There are a lot of aspects of it that we need to understand. How government raises money, how government, so if government is funding NAPCO, how does it get the money? If government is doing planting for food and job, if government is doing free SHS, government is building schools, government is building hospitals, how is he able to raise all of this money? So the mechanisms of raising the money, spending the money, monitoring, and the efficient and effective implementation of all public sector objectives is what we refer to as the public financial management. But the big question we need to ask ourselves is, all right, at the end of the year, how do we assess the performance of the government? How do we say, okay, this government has been able to achieve its objective? How do we say the government has been able to achieve its goals? How do we assess the performance of the organization? This has been something very difficult over the years until around 2001, when some organizations, international development partners and governments came together to form what is referred to as the Public Expenditure and Financial Accountability Framework. That is the PEFA. So in a simple language, we say that the PEFA is a program that provides a framework for assessing and reporting on the strength and weaknesses of public financial management using quantitative indicators to measure performance. So let me take that again. When we talk about the Public Expenditure and Financial Accountability Framework, it provides a framework for assessing and reporting. So two keywords are here that we need to pay close attention to. For assessing, okay, and then reporting, two things. So you assess, report on the strength and weaknesses of public financial management using quantitative indicators to measure performance. So right from the definition of PEFA, we know that we are going to be dealing with some quantitative indicators, not necessarily qualitative indicators. These are, that's going to be one of the limitations of the PEFA. It doesn't look at the qualitative, but rather looks at the quantitative indicators to measure the performance of the government in that case. So that is what the PEFA is about. It provides a framework for assessing and reporting on the strength and the weaknesses of public financial management using quantitative indicators to measure performance. So the big question we ask ourselves is, why this? Why this? Why PEFA? Who brought it up? Why is it here? Why are we learning it in public sector accounting and finance? So let me give you a brief background of PEFA, and then let's see how it goes on. So background, I see some of you joining the stream. If you join the stream, you give us a thumbs up on the video. Then any questions you have, you put in the chat box for me. Irene Mawuli, I see you. Good evening. I hope you're doing well. Irene. So the background of the PEFA. You see, like I mentioned, it's difficult to really identify how government is able to implement its policies concerning development and poverty reduction. You see, the objective of almost every government is to implement national policies about development, okay? But at the end of the day, every policy must lead to poverty reduction. So these are the two extremes we need to understand. Now, for the government to be able to achieve this, implement policies that will enhance the development of the country, as well as help government to achieve the objective of poverty reduction, there has to be a good financial management system in place. In other words, we need to find out how resources are obtained, how services are delivered, and how government is able to achieve its objective. So in order for us to be able to assess and appropriate and understand whether the government public financial management system is effective or efficient, and whether there are available resources, delivery of services, and the achievement of government policies are being done well, we need to find a way to assess the financial management system or the public financial management system of the country. It is for this reason why the PEFA was initiated in the year 2001. So in the year 2001, 7 international development partners came together to form what is referred to as the PEFA. Now, who are these development partners? Definitely, you should be familiar with them. The European Commission, the International Monetary Fund, IMF, the WB for World Bank, then governments of France, Norway, Switzerland, and United Kingdom. So these 7 development partners came together to form the PEFA so that it will provide a means to harmonize the assessment of public financial management across the partners organization. So they came together to form the PEFA so that it will help them to assess the public financial management system in these countries like France, Norway, Switzerland, and then the United Kingdom. Not long as of 2015, about 149 countries have now adopted the PEFA to assess their performance, and these reports have been made available to the organization or to these bodies to be used to assess the performance of the financial management system of the country. So this is the background. This 7 development partners came together to identify how can we assess public financial management of a country. How do we ensure that the country is having a good financial management system or a poor financial management system? How do we ensure that resources are obtained, services are delivered, and government is achieving its objective? How do we do that? They came up with the PEFA in that case. So that is why the PEFA came up. Now, the PEFA usually includes an overview of the public financial management system and its evidence measurement against 31 performance indicators. Now, I want you to stay with me carefully here. There are a lot of bombs I'll be dropping here to enable you to understand what we are having. So the PEFA framework in a nutshell has 31 performance indicators categorized under 7 pillars. I'm going to break all of these down later on as we continue with our discussion. But that is the idea you need to understand, that it provides us with 31 performance indicators against which the performance of the public financial management system of a country can be measured. And these 31 performance indicators are sub-categorized into 7 key pillars that are used to assess the performance of countries or governments. So someone may ask, what then are the reasons for the framework? What does the framework do? What can it do? What can't it do in relation to that? So let's look at the reasons for the framework. reasons for the framework. Number one, the PEFA is a tool that helps government achieve sustainable improvement in public financial management practices. So one of the reasons for the, or if you want the importance, or if you want the objectives of the framework, is to assist government in sustainable improvement in financial management system. So for sustainable improvement in public financial management. Why is this important? Because the framework provides, like I mentioned earlier, 31 performance indicators against which the public financial management institutions, systems, and processes are measured. So if we measure and we realize that, oh, there is something here we don't know, or there is something here that is not going on well, what do we do then? We can improve upon what we are doing for the organization in relation to that, or for the entity in that case. So number one, for sustainable improvement in public financial management. Number two, the PEFA report also outlined the economic environment faced by the public sector. In other words, it examined the nature of policy-based strategies and planning of the entity of the government. So PEFA examines the controls used by government to ensure that resources are obtained and used as intended. So it examines the controls by government for the resource generation or revenue generation and the spending of their money in order to achieve value for money. So basically, that is the second thing you have to understand about the reasons for the PEFA. Then the third thing is that the PEFA provides a snapshot of the public financial management performance of the country. So it provides a snapshot of public financial management performance. You see, because it's 7 key pillars under 31 performance indicators, in a nutshell, we can see it at a glance, what is happening. So under each of the pillars, what is happening? What is the revenue outturn? What is the expenditure outturn? What is the budget reliability? We'll be able to know all of these. We'll get into all of these in a moment. Then the fourth thing is that it also provides a support, monitoring, and analysis of every assessment. Usually, the PEFA Secretariat provides support, monitoring, and analysis of any assessment that government makes in that case. So that is what you need to understand when we talk about the issue in relation to the PEFA. So I'm going to share my slide with you here. I'm going to share my slide with you here, and we're going to go through my slide in that case. Zolak, I see you. You are welcome. So remember I told you earlier that the PEFA is generally divided into 7 pillars, or we have the 7 broad pillars, which is broken down into 31 performance indicators under which, or which are used to assess the performance of the organization. So let's look at these 7 pillars in detail. Now, the examiner could ask you to just write short notes on them. You know, this place is quite a bulky area. So the examiner could ask you to list them up and then explain them, or probably under them, explain everything under them in that case, or something about them in that case. So let's look at the 7 pillars against which the public financial management can be managed. Hello, Samadhan, I see you here from India. You are welcome. I believe you are doing well. If you join the stream, give us a thumbs up on the video. That way we get more engagement on the video, and YouTube will be able to push the video so we can reach as much students or as many students as possible. Thank you for all videos. Cheers. Cheers. Some had cheers for you. So let's look at the 7 pillars that are used to measure or assess public financial management. The first one is public budget reliability. Second one, transparency of public finance. If you join the stream and you have any questions, please put it in the chat box, okay? I'm taking your questions live here, so I could read and then answer as well for you. So the first one is budget reliability. Second one, transparency of public finance. Third, management of assets and liability. Fourth, policy-based fiscal strategy and budgeting. 5, predictability and control in budget execution. 6, accounting and reporting. And then 7, external scrutiny and audit. So these are the 7 key pillars that are used in assessing public financial management. So let's look at them briefly and look at what they are. And we are going to be looking at them in much detail later on as we continue. So when we're talking about budget reliability, what does this measure? What does this look at? Now, the government's budget is realistic and it's implemented as intended. This is measured by comparing the actual revenues and expenditures with the original approved budget. Please note, under ratios, that is analyzing financial statements. Remember, in public sector, when it comes to analyzing financial statements, there are 3 things you must note. Number 1, we have the common size ratio. Number 2, we have the ratio analysis. And then number 3, we have the budget variance analysis. Now, under the budget variance analysis, this is where this pillar comes in, budget reliability. Now, under that budget variance analysis, there are 3 key things that we must understand according to the PEFA framework: revenue outstanding, expenditure outstanding, as well as expenditure composition outstanding. So, like I said, we're going to be looking at these later in the slide. But when we talk about budget reliability, we are finding out comparing the actual revenue, the actual expenditure against or with the original approved budget. So if government said that, okay, we're going to be making, or we're going to be earning, or Ghana Revenue Authority informed government, and by that, the government says that we will raise tax revenue of 31 billion Ghana cedis. At the end of the year, did we raise 31 billion Ghana cedis of revenue? Now, if we are supposed to raise 31 billion, but if we raise something like 25 billion Ghana cedis, it tells you that the budget cannot be reliable. It tells you that we are poor in terms of the budgeting. So either we are inefficient and effective in our budgeting system, or the revenue authority is inefficient in their collection of the revenue in that case. So under budget reliability, 3 key things will be spotting out or will be coming in: the revenue outturn, the expenditure outturn, and then the expenditure composition outturn. That is the first thing we measure when it comes to budget reliability. Can the government rely on the budget? Is the budgeting system okay, or the government is just saying something? Because sometimes one topic in budgeting is one topic in public sector, it's budgeting. And you know, there is a media review that a finance minister here in Ghana does. I'm in Ghana, so I'm talking about Ghana. mid-year budget review. And almost all the time in the mid-year budget review, the finance minister will say, oh, the government was not able to achieve A and B. So for that reason, we are requesting for additional funding, supplementary budget to be submitted. So at the end of the year, at the end of the accounting year, we want to assess, comparing what government spent, comparing what government received against what it was approved to be received by Parliament as the appropriation, how is it? And that will help us to assess the public financial management system. So that is the first thing, budget reliability. Number two, transparency of public finances. Transparency of public finances. Okay, so I see some comments coming in. Let me see if I can answer them real quick. Dominic Chase said, sir, please, I find it difficult when studying accounts for MDAs. Could you please do a class on that for us? Appropriation accounts, parliamentary accounts, etc. Okay. Final accounts on MDAs. Now, what is your challenge? Let me know the area of challenge, because when it comes to the MDAs, you must know how to recognize their revenue and how to treat their expenditure. Normally they have seeded revenue, or if you want internally generated fund, there are grants that they are received. There are a couple of other revenue that they receive. Then their expenditure will go into things like goods and services expenditure. So let me know your specific challenge when it comes to the final account of the MDAs. But I'll see if we can do a final accounts video of the MDAs. We already have on the channel a video on final accounts, I think on the consolidated fund. So once you have raised it up, we will look at it if it is possible for us to do that as soon as possible. So the next item, transparency, that was what I was talking about before Dominic came in. Transparency of public finance. This is one of the critical aspects that we want to look at when assessing government financial management system. Why is this important? Because you see, information on the public financial management system has to be comprehensive, has to be consistent, and has to be available and accessible to users. How do we achieve this so that users can be able to have information about budget classification, issue in relation to intergovernmental transfer, public information on service delivery, and all of those things? So transparency of public finance. Do we have the documents available to be able to talk about whatever thing that it is? That a contract is available, but the contract is a top secret. So the amount of the contract is not known by anybody, or government is issuing bond and we don't know the people who actually bought the bond or who actually, how do we call it, subscribe to the bond. That is an issue there. Or maybe there is an expenditure that has been paid by a spending unit, an MDA or an MMMDA. At the end of the day, there is no document validating that. All these things are going to be affecting the public financial management system. I think around, is it last year or this year, the information, rights to information bill has been passed. But again, that doesn't mean you can walk into any MDA or MMDA and say, I want information on this contract. Then they will carry it and give to you. No. But what we're saying here is that everything about the finances of the organization, of the entity, of the government has to be made publicly available so that it can be accessible by users who are affected by it. There are a couple of indicators that we are going to be measuring in a moment. 3, management of assets and liabilities. Very critical. Every government has assets and has liabilities. So at the end of the day, we want to find out how are they managing their the public financial management well? How are assets managed? How are liabilities managed? And we see this thing happening a lot, and we hear that, oh, government's debt stock is increasing, but the debt to the GDP is falling, debt per capita is falling, and other terminologies they will be saying, how are they working it out? Okay, how are they working it out? That is what we want to look at under this indicator. So effective management of assets and liabilities ensure that public investment provides value for money, that assets are recorded and managed, fiscal risks are identified, and debt and guarantees are prudently planned, approved, and monitored. And there are a couple of indicators that we are going to be measuring as well under this. So we're going to be looking at this as we continue, but it's about how assets are managed, how liabilities are managed. It is this aspect that will enable us to assess whether the government is doing well or the government is not doing well in relation to items about public financial management. So for instance, this is just an example. Maybe Ghana issue a loan note or a bond and then have an interest rate of say 22%. Then Rwanda will issue a loan note and Rwanda will have an interest rate of say 13.5%. And they all issue on the same day or in the same period. You realize that many investors are subscribing to the Rwanda's bond and it's oversubscribed, and Ghana's own, which is having a highest or the higher interest rate, is undersubscribed. Why? It's because of the debt portfolio management of the country. Because if your debt stocks are going up and you're not investing them in any assets, you are not doing any capital investment project, and you're using them for, how do we call it, recurrent expenditure, it means that there is no future economic benefit, and in future, something could be affecting us in relation to that. So that is also the third one we're going to be looking at. And there are a number of indicators under that I'm going to be running through with you. Now, this is public sector. So when I'm explaining things, I'm going to be mentioning a lot of things about the government, about this. Now, that doesn't mean you will stand somewhere and say, I am being critical to the government. I'm being NDC, MPP, PPP, YPP. No. I'm objective. It is just to get the point across. So don't take it out of context, okay? That's it. Fourth, policy-based fiscal strategy and budgeting. Policy-based fiscal strategy and budgeting. Now, the fiscal strategy and budgeting and the budgets are prepared with due regard to government fiscal policies, strategic plans, and adequate macroeconomics and fiscal projections. So this framework tries to look at how budget is prepared by the government. So how do we go about the preparation of government, the budget? Okay, so how do we develop the fiscal strategy plan? Now, this is also in the syllabus under budgeting and is also classified better under the Public Financial Management Act 2016, Act 921. Remember, I've told you guys you need to get that act and go through it there, because there are a lot of things in that act that will assist you to understand public sector in general. So we're going to be looking at this later also, the various indicators we look at. Next one, predictability and control in budget execution. So how are budgets prepared? That's the fourth thing. Okay, how is the budget actually executed? How is the budget actually implemented? We need to also assess that. Are budgets implemented in accordance with the laid down procedures, laid down budgets? Are revenue being raised in line with the way we are supposed to raise it? Are we achieving revenue targets and all of that? So the budget is implemented within a system of what? Effective standards, processes, and internal controls, ensuring that resources are obtained and are used as intended. So this indicator also has a number of, or this pillar, sorry, has a number of indicators under it that will assist us in order to assess the efficiency and effectiveness with which government is executing its budget and how resources are obtained and whether they are being used for their intended purposes. Because if, let's say, for instance, the COVID-19 fund that has been established by government, maybe, let's say the fund was established by the government so that it can raise money to finance some issues or some things. Then all of a sudden we see that the government has taken money from the COVID-19 fund and they are using it to build residential properties or residential apartments for the ministers or the members of parliament. What's that? You see that it is out of context. It means that revenue is not being used for the intended purposes. Okay, so something, it may look like environment, but it's not supposed to be so in that case. So we'll look at this one also in a moment. Dominic Chase said, in fact, you are doing a great work. All right, you are welcome. Thank you very much. Number 6, accounting and reporting. This is my favorite area. This is where we put the bases together. You see, in the budget execution, records must be kept, accounts must be kept, financial statements must be prepared. That is what we mean by the accounting and reporting. And we need to have these information available for decision making and for management needs in order for them to make decision making. That is why the GIFME system has been developed. That is why there is that centralized system that at the end of the day or at every time, government is able to know how much revenue we raised, how much expenditure we incurred, what is our asset balance, what is our liability balance, and what is our debt stock, so that governments can be able to make the decision as and when it goes. So accounting and reporting, we'll look at that. And then the last thing is external scrutiny and audit. At the end of the day, the financial statements must be audited. First, the auditing will be done by the Auditor General. So the Parliament is going to approve the appointment of the Auditor General by the President, and he is going to be auditing the accounts of all government organizations, MDA, MMDAs, subvented organizations, universities, public corporation. All of these has to be audited in that case, so that the report will be submitted to Parliament as well as the executive arm of government, and then the appropriate actions and decisions will be taken so that financial irregularities, not achieving value for money and other things will be handled and dealt with as and when we go ahead. Because remember, we said one of the key reasons of the PEFA is to enhance sustainable improvement in public financial management. So how do we do that? Audit is going to be carrying out that in that case. So these are the 5 broad pillars we use in the assessment of public financial management. Like I said, under these 5 pillars, there are 31 pillars of 31 indicators that we're going to be using to really assess the organization's performance. Okay, just skip this. So some limitations of the PEFA framework. Even though it looks good, it helps government to assess a lot of things, it has some limitations. So let's look at it. Number 1, PEFA does not measure every factor affecting public financial performance, such as legal framework, human resource capacities within the government. That's a limitation. Okay, so the PEFA doesn't include that. All right, what are the legal framework around the expenditure, around the revenue raising, and then how capacity or human resource capacities will be built? It doesn't measure that. All right, it doesn't measure. This will be like learning and innovation under the balanced scorecard. For those of you who know about the balanced scorecard, it will be like learning and innovation. It doesn't measure that. Okay, that's one of the limitations of the PEFA. 2, PEFA also does not involve fiscal or expenditure policy analysis that will determine whether fiscal policy is sustainable. So to some extent, the PEFA doesn't look at really expenditure analysis to find out the breakdown of everything and find out whether they are growing up and what the government must do in order to resolve it. It doesn't really give that breakdown of the items, even though it gives some underlining things that we need to look at. The breakdown is not really there for the fiscal or expenditure policy analysis of government. Then the last one is that PEFA does not provide recommendation for reforms or make assumptions about the potential impact of ongoing reforms on performance on public financial performance measurement. So it doesn't provide any recommendation for reform. So in other words, when you finish, the framework itself will not tell you if it is this, do this. If it is that, do this. If it is this, do that. The framework itself doesn't give you that. That is why I mentioned earlier that when governments send their reports to the development partners, IMF, World Bank, and then these organizations, then they will now, the secretariat will look at it and say, okay, then do this, then do that, then do this. So the framework itself doesn't provide any recommendation in that case. So these are some limitations we can say about the public financial management system. Then the next thing is to look at the PEFA performance indicators. Remember, I told you that there are 31 indicators across the array of performance public financial management activities that we can measure. And I said that these 31 indicators are under the 7 pillars. So we want to look at how these indicators are used by the government. Barikisu Geoffrey, I see you. Hi, I hope you're doing well. So each pillar comprises a group of indicators that capture the performance of the key system, processes, and institutions of government. Then each indicator in turn includes one or more performance dimensions. So let's just look straight. I'm not going to go through everything I have in my slide here, but I'm just going to provide you with some ideas on how these things are done. Please listen to this carefully. Listen to this carefully. Remember, I told you that in the beginning, I told you that when it comes to analysis of performance of financial statements, in public sector, there are 3 key things you need to understand. Number 1, common size ratio. Number 2, ratio analysis. And number 3, budget variance analysis. The reason why I'm going back about that is because when we talk about the first pillar, budget reliability, the indicators there, the examiner may ask you to compute them and use them to assess the financial performance of the public sector entity in a question. Okay, in a question. So you've got to be on the lookout for that. So the first thing is budget reliability. So under budget reliability, there are 3 key indicators and there are about 6 dimensions of that. So the 3 key indicators are what I mentioned the examiner can ask you to calculate in the exam hall. The first one is aggregate expenditure outturn. Now, usually when we are looking at outturn, we are looking at the budget minus the actual over the budget times 100. Let me take that again. If we look at anything outturn, so let's say, for instance, number 1, we're looking at aggregate expenditure outturn. We will bring the budgeted total expenditure minus the actual total expenditure divided by the budgeted total expenditure times 100. So that will give us what? The expenditure outturn or aggregate expenditure outturn. Then the second one is expenditure composition outturn. Now, the meaning of the expenditure composition outturn simply means that we pick each of the expenditure items. So personnel emoluments, goods and services, interest, okay? What else? Maybe if you are dealing with the central government, then grants to the MDAs and MMDAs. So when we pick each of these items, what is the outturn? So for instance, we can have budgeted personnel emoluments minus actual personnel emolument divided by budgeted personnel emoluments times 100. That is what is called the expenditure composition outturn. Okay, the expenditure composition outturn to find out whether we spent more than our budget or far less than our budget. Because when it comes to expenditure, at most, you should spend close to your budget, maybe about 96% to 105%. That is the gap. It means your performance is high. But if you're like 85% or more than 115%, that means you did not do well. There is a poor performance there in that case. Now, in case you are asking me, Nhyira, how are you getting these percentages? These are the rules on the interpretation of these things, all right? And I'm not covering really interpretation or analyzing of financial statements in public sector here today, but that is the idea. So if we come to the expenditure outturn, ideally it should be between 96 and 105%, which means that the institution is, yeah, performing at its highest best. But if it is below 85% or above 115%, there is a poor performance. Remember, if it is below 85%, it means you are not spending as much to even meet your budget. And if it is 115%, it means you are spending more than what you budgeted for. And that means you are not doing well. Either you are not achieving value for money or you are spending money anyhow in that case. So that is the issue in relation to the aggregate expenditure outturn and the expenditure composition outturn. If you join the stream and you have any questions, please put it in the chat box for me, and also give us a thumbs up on the video when you join. Next one, revenue outturn. Like the expenditure outturn, the revenue outturn also look at, okay, are we able to meet our revenue targets, or we are exceeding the revenue targets? So revenue outturn, budgeted revenue, actual revenue, over budgeted revenue times 100, all right? And we could have what is called the revenue composition outturn. Now, when we take government revenue in total, we have tax revenue. Now, before even that, we have direct tax, indirect tax, non-tax revenue, grants. All of these things, when we pick each of the items, we can calculate an outturn on them. So on the dimension side, you can see the breakdown of these items there. And like I said, the first one, which is the budget reliability, may be in the exam hall for you to compute when analyzing the financial performance and financial position of the public sector entity. Next one, transparency of public finance. Transparency of public finance. So when it comes to transparency of public finance, what kind of indicators are we looking at here? Remember, I told you earlier, this is about making information available, accessible to the public, making records available. So what are we looking at here? The indicators here includes budget classification. How has government classified the budget, classify the items, classify the various things in the items or in the accounts? 2, budget documentation. Everything or the information in the budget, do we have supporting documents on them to prove their reliability? Central government operations outside the financial report, transferred to subnational government, or if you want, MDAs and MMDAs, performance information for service delivery, and then public access to fiscal information. So these are the things that you have to understand when it comes to transparency of public finance, and the dimensions are what you see on this side from 4.1 up to 9.1. So budget classification, budget documentation, all of these are the breakdown of the issue in relation to transparency. Then we come to management of assets. If we want to look at assets and liabilities, if we want to look at how government is able to manage its assets and liabilities, there are 4 indicators that we are going to be using. The first one is financial risk reporting, public investment management, public asset management, and debt management. Very, very important. So for instance, you hear the finance minister or Baumia will come and say that the president, the vice president, sorry, Baumia will come and say that, oh, government is managing its debt stock well. Yes, even though the debt is going up, our debt to GDP, it's also going, or it's falling. I don't know, there's a way they do all of those things. And they will give you a couple of, now it's not just economic factors or those kind of things, but They are there to really tell you that, yes, our debt stock may be rising, but if our GDP is also going up, it tells you that the debt may be put into a good use. But if the debt stock is rising, your GDP is falling, and your debt per capital is increasing, and your tax revenue is falling, then you're in a mess. So if you want to really assess organizations or their government's performance in terms of the management of its assets and liabilities, we look at how public investments are managed. We look at how assets are managed. We look at how public debts are managed, because at the end of the day, the debt portfolio or the debt stock of the country must be efficiently managed. So you will hear that, for instance, this government especially would say that, yes, they have borrowed a lot, but part of the money they borrowed was to repay loans. So what they did about the debt stock or the debt portfolio was that any debt that was due to be paid, like we are left with some short period to pay, they borrowed extra so they can pay that off. And those extra borrowing are long-term, so that it will buy time for the government. So it will not be thinking about repayment of debt, but will be thinking about building the country, building the economy in relation to that. So yes, our debt stock is rising, but part of the debt stock was to repay some debts which were due or which were about due, so that it will buy time literally for the government, so it can focus on the development of the country in that case. So a couple of things under the public investment management, we're looking at issues like economic analysis of investment proposals. So if there are investment proposals, economically, is it good? Is it something we can pursue? What economic value will it add? Will it provide employment? Number one. Will it provide tax revenue for the government? Number two. Will it increase the standard of living of the citizen? That is very, very important. So all those things are benchmarked. That is why under the one district, one factory, you don't just get up and say, I have an idea, no, then the government will arrange, then the finance will be made available by the bank. Remember, government doesn't finance the one district, one factory, okay? Government only facilitates the process. So if you have an idea or you have a business and you need more expansion, you send them a proposal, then they will look at it, okay, if we expand this factory, can it employ more people? Okay, how much tax revenue can we make as a country? What's the benefits on the standard of living of the people? If it's a good deal, so it goes through processes under at the Ministry of Trade and Industry. It goes through the process, and the Ministry of Special Development Business Initiative, those things. It goes through all that, and once it is approved, government support is issued, and then you'll be able to raise the finance for the project. So investment project costing, how much is going to cost us? Investment project monitoring, that is if the project is actually implemented. So these are also some things you must understand when it comes to assessing management of assets and liabilities in public financial management. 4, policy-based fiscal strategy and budgeting. Very, very important area. I told you this is about how government prepares its budgets and whether the budgets are prepared, taking into consideration a number of short-term and long-term issues. Now, as always, when you hear the finance minister reading the budget, he is not just reading the budget for, say, 2021 or say for 2020, but it's a medium and long-term budget, because Ghana uses the medium-term expenditure framework policy in its budget preparation. So we don't just prepare the budget for 1 year, but the budget actually overlaps into the next 3 years, into the next 5 years, because everything government does will not just be done in 1 year, but will be carried through to the next 3 or 5 years. So under this, there are a couple of indicators we need to look at. The first one is the fiscal strategy, macroeconomic and fiscal forecasting. So how is government able to forecast? This is how much revenue we're going to raise from tax, from oil, from grants, from loans. So this is how much we're going to be raising. All right, this is how much we're going to spend. Okay, we're going to do one district, one factory. We're going to spend this on free SHS. We're going to spend this from school feeding. We're going to spend this on roads. We're going to spend this on election. We want to spend this on this. So the macro fiscal forecasting of the government is very critical. Then the medium-term perspective in expenditure budgeting, because it's very important. Like I said, we cannot just budget for 1 year It has to be in the medium term, 3 to 5 years, or maybe 1 to 3 years, or in the long term, 3 to 5, 3 to 10 years in that case. So there are a lot of times when the Minister of Finance is speaking and the Vice President is also speaking, you see that anything that they talk about in what government is doing, they will not just talk about it as being something that will assist us just this year, but it is going into the next 3 years, the next 4 years, the next 5 years in that case. So we need to assess the medium-term perspective in expenditure budgeting. So is government spending money taking into consideration future benefits? That is why I told you earlier, if our debt stock is going up, but our GDP is falling, if our debt stock is going up, but our assets, infrastructure, property, plant, and equipment is reducing, that means there will not be future economic benefits. So you are taking loans and you're using it to pay employees, because you have a lot of ministers, a lot of deputies, a lot of directors. You are taking loans to pay all those things. That means you've taken a loan, there's a future liability to be paid, but there are no assets, there are no infrastructure, property, plant, and equipment that would generate economic benefits to finance that debt. So that is the issue we need to understand in that case. The next one is the budget preparation process. It's very, very important for us to look at how the budget is prepared, the process of budgeting. Is it effective? Is it efficient? Does it follow the laid down regulatory framework as per the Public Financial Management Act 2016, Act 921? We need to look at all that. Then legislative scrutiny of budgets. Remember, the legislature that is going to be that's Parliament. After Minister of Finance prepares the budget on behalf of the president, it has to be presented to Parliament, and Parliament will investigate, will look at it, debate on it. Once the budget is taken to Parliament, it is broken down into the various committees, subcommittees in Parliament, and each committee will look at the various aspects of the budget. They debate on it. Let's change this, let's add this, then they approve it. So we want to also look at that and assess that, and that is under the policy-based fiscal strategy and budgeting. So that is also something you must understand there. Patience, Pinstall, I see you. Greetings. I hope you're doing well. More or less like you are late today. Or you've been around since. So there are other issues there, like accounting for revenue and that. Next one, number 5, predictability and control in budget execution. Very important. Internal audits, internal controls on non-salary expenditure, how duties are segregated, effectiveness of expenditure commitments, compliance with payment rules and procedures. That is why you would have to issue a warrant and all of those things before payments can be made in that case. So we want to make sure that these things are working well, whether there are internal audits in the organization, in the public sector entity, doing what they have to do in that case. Next one, accounting and reporting. The key thing here is the annual financial reports. Very, very important. We need to find out that accounts must be prepared in accordance with the IPSAS, that is the International Public Sector Accounting Standards, taking into consideration various issues in relation to that. Patient said, no, please, I just joined. I just got home from town. All right, patience. Then the 6th or the 7th thing is external scrutiny. And we've spoken about that, about the Auditor General auditing the financial statement and reporting on any financial irregularity, submitting the reports to Parliament, Parliament further looking at it, and then the Public Accounts Committee setting up for hearing, and then inviting any individuals, public managers or heads of departments who may be found wanting in any financial irregularity in the report of the Auditor General, as well as the investigation or the scrutiny carried out by the Public Accounts Committee. I think before the COVID-19, the Public Accounts Committee was reviewing, I think, 2016 annual budget. I don't know, I stand to be corrected though, but I think 2006 or 2007, something like that. Did I say 2006? No, 2016. 206 is too long. So 2016, I guess, or 207, they were reviewing that before the coronavirus halted everything in that case. So these are the 7 pillars that we use to assess the public financial management and find out, is it good? Is it not good? Is it working well or is it not working well? So generally, when we talk about the public expenditure and financial accountability framework, these are what we are referring to here. Any questions for me? Any questions? So like I mentioned, last semester, the examiner didn't ask anything about this. So So you want to make sure that you are really looking at this very well. And like I said, the examiner can ask you to explain each of the pillars. What is it about? The reasons for the framework. So you make sure that you understand each of the pillars and at least under each pillar know about 3 indicators and then dimension are under them. I know it's quite bulky, 31 indicators, but at least have an idea of what each of them cover, because that will help you that will help you to be able to understand what is happening. So you need to understand what a PEFA is, the reasons for the PEFA, and even the limitations of the PEFA, very, very important. And then the 7 pillars and what we look at in that case. So usually when we talk about a public expenditure and financial accountability framework, this is what we are talking about. And this is what I want to share with you today in public sector accounting and finance. So any questions for me? Okay, so that is it about our discussion today. And God willing, tomorrow I'm going to be coming your way as well. And you can follow me on my Facebook page and on my Instagram account as well, because the meeting details and what will be covered will be posted. On these platforms, and you can get a notification and join. I'm also going to be hosting a special Q&A session on Zoom. Now, we're not going to be streaming this on the YouTube channel here or even on my Facebook pages. It's going to be an exclusive private Zoom meeting that I'll be hosting with on selected subjects as we proceed, probably next week hopefully. And keep on following me on Instagram as well as on Facebook, because the meeting details will be posted on these two platforms, either on my Facebook page at Nhyira Premium or on my Instagram account still at Nhyira Premium. So it's going to be an exclusive Zoom session that I'm going to be having on specific subjects, so I can provide you with some specific assistance in order for you to prepare well for your examination. So stay tuned, keep following me, and tomorrow I'm going to be coming your way still. But like I said, we're going to be having exclusive Zoom sessions as we proceed, and you can come in, speak with me directly, and then ask me questions, and I can provide you with strategies on specific issues and what you need to do in order for you to pass your exams. I'm doing this because a lot of you guys were asking about our intervention class and you wanting to join our intervention class, but our executive revision masterclass is not open to the public. It's exclusive for only our students, both on campus as well as online. So it's exclusive. I don't do intervention and let students come. It's exclusive for our students. So this is just going to be a one-time session that I'm going to be hosting on Zoom. And like I said, it will not be streamed anywhere. So it's going to be exclusive. If you miss it, that is all. So you keep on following me on Instagram as well as on Facebook, and the details will be posted and you can get a notification, plan for it, and then join me on the session so I can assist you to prepare well for your examination. So Zolak said, thank you, sir. You are welcome, Zolak. So I'll see you same time tomorrow. Remember, coronavirus is still here, so you make sure that you wear your nose masks, you take care of yourself, and do whatever it is that you need to do in relation to staying safe, sanitizing your hand, wearing your face mask or your nose mask, keeping your social distancing and all of that. You make sure that you do that. And I believe that we can stay safe and take our lives to the next level. So I'll see you same time tomorrow as we continue with our discussion, 4:30 p.m. or 16:30 GMT. So let's see some shout outs. Big Franco, Grace Defia Mepo, Gordon Dibuji, Irene Mauli, Zolak, Samadan from India, Dominic Che, Barikisu, Patience, all of you guys, thank you very much for joining the stream as always. And I'll see you same time tomorrow. Pawili, I see you. Have you been here all this while? Or you are just joining, Pawili? I believe you have been here all this while. Okay. All right, so Patience said, God bless you. Amen, God bless you too. It's my hope that you guys will work hard and pass your exams and go to the next level. That's my ultimate purpose. That's why I'm doing this for you guys, all right? So make sure you put in the work. I've always said this, put in the work, put in the effort. Don't procrastinate. This is not the time you procrastinate. We have barely 26 days to go for you to make the magic happen, and it's possible. So don't wait for any intervention class anywhere. Attend the intervention class, but don't think you are going for a magic pills to pass the exams. Whatever it is, sit down, study, go through your books, and I believe that if you work hard, you should be able to pass your exams in that case. So keep working hard, and I'll see you same time tomorrow. Bye-bye.